So today I'm going to be teaching you another strategy on how I get earnings targets or price targets, and it's based off of Fibonacci trading. If you've seen any of the lines on my charts, wondering how I draw it and how I get these lines, I'm going to be teaching that today because hopefully this will help you in learning quarterly ranges, earnings price ranges, as well as why the SPY is moving in this 362, 390, 407, 435. So, okay, let's get right to it. So you know that I pretty much get targets like to the dollar where it's almost like, wow, how did she get that? Like, I don't get it. What does she know, right? So I'm going to tell you everything I know on how to trade with Fibonacci charting that maybe you've been curious about, right? So this is what I do. So first off, what is Fibonacci, right? So Fibonacci is an Italian mathematician. You know, I'm a math nerd that created the sequence of numbers starting with 0 and 1, and it steadily increases, and it's the sum equal to the sum of preceding two numbers. So a lot of people call this the golden rule or the golden number, the golden ratio. So 1.618, important to math scientists and interests, approximates 1.618 or its inverse, 0.618. If you look at any of the charts that I always post, I have already lines on them, right? So I never have to look at the long-term chart because I traded so long and I memorize them. But for people that just want, that are just starting, I'm going to teach you guys how to draw it and how the golden ratio works into your sequencing. So when you go onto your platform, whichever you trade on, this is TOS. So I go to a chart, right? Then you can go to drawings and you're going to see drawing tools. And over here, this is called the Fibonacci retracement, extension, time series, time ratios, time extension, Fibonacci arcs, fans, the spiral, and pretty much it's these four. So majority of platforms have this. Like if you trade crypto, Kraken has it. Multiple platforms should have this. There's a mathematical calculation. When you want to draw something like this, normally, okay, so when you're first setting up your Fibonacci's, this is what I usually do. I started off on my triple 3 time frame charts. This is important because whether you day trade, short-term trade, swing trade, or even position trade, it will predetermine your areas of resistance and support for that quarter. My targets for day trade so accurately is because I have it all planned out. So planning is key, experience is key. You could only go as far as what you know, right? So here's what I do. I want to look at the XLE. I've never charted this, so I'm just doing this new, okay? With you guys. So I usually start from the max. So how I set up these 3 time frames is like this. So this is on TOS. Instead of using charts, the singular chart, I went to flexible grid, right? And if it was just blank, there's these dots right here. So you go over here and then you can go to customize grid, right? And then these pop up and then you could delete, add one to the side or add one to the bottom. So when you add one to the side, you can make it 4 charts, right? Or you can make it split chart, however you want it. But as a base, I believe everybody should have at least a triple 3 time frame chart. Whenever you look at stocks, don't just look at one time frame. Look at them all at the same time so that you have a general idea, where is this stock going? Where has it been? Where can I predict the future outcome, right? When you add your indicators, here's another thing. You could add your indicators like this. Go to studies, right? And then you could add a study or edit your studies. I'll show you what's on mine. So what I did was I put average volume or volume average, right? You can see that here, volume average, right? So let's say I selected it. I move this up next to volume. So that's what makes these green and red. Okay, say you have your 3 time frames. Then from here, you go to this thing where it should say like daily. It should say day, right? So if you go there, then you could go to customize list. And here's all the time frames that I have set up. So you can save this. You could add a time frame. But here's what I have mainly. I'm going to show you why. You want to know the short term, right? And then you want to know what happened for the week. The reason I have 3 months is I want to know what happened that quarter. Then 6 months, there's this thing called cyclical stocks. So every 6 months, like discretionary, which is like Amazon, right? People shop more in the summer and more in the winter. So then I want to know what happened on cyclical stocks for that 6-month time frame. Then I want to know how did it perform that year. And then usually the market rotates in like 3-year time frames, right? So I want the 3-year. I also want 5-year just in case, 10-year, and then I want to know the max history. Okay? So when I start off with my fibs, I always start off with the max. And then, okay, so once you have your 3 time frames, so I'm going to start off with the max here, then my daily for the year, then I get my short term, so I know, okay, today I know I want to trade this between this range, and I'm going to aim for this top, right? So once you have your time frame set, then you could save it, save flexible grid. And then I have this as my 3 time frames main, save, right? So let's say cancel. Okay, I don't need to do that. But then when you go back to this and then you open up your platform, you're going to see 3 time frames, right? I have different customized grids set. So I have like US retail, I have financials, even different time frames on the financials. I have retail for China mega caps. I have cloud sector. So one shot in the morning, I can see where the whole market is going based on sectors. So if you have it set like this, then first of all, you're already like on top of everybody else, right? Okay, so once you save it, then you could uncheck your customized grid and start drawing on your thing, right? Okay, so from here, what I do is this is the max. So I find where was the max bottom, right? And from here, right click, add a drawing. And then this time, I just want to know the major ranges. So for the major ranges, I go to Fibonacci retracement, right? And then I just drag from the bottom to the very, very top, right? And look how, like, it's pretty aligned, right? From the bottom to the top. Now it's showing this support, showing this support. It's showing this resistance. And then here, right? So, okay, so this shows some major levels. It's like holding in this level. It's holding in this level. So now we know, okay, it's uptrending for XLE. We'll see if it breaks down, right? Because energy is opposite of consumer cyclical. If we go to XLK, this one is tech, right? So we'll do this one with you next. So we're going to just do this practice one more time. Right click, find the fib that you want, which is the retracement for this fact, and then drag it to the top, right? And then now look how perfectly fell, right? This isn't a coincidence, just so you know. Okay, so now I have my major areas, right? So what about the minor areas, right? So then I get, okay, where was the breakaway point? Now I want to know a more closer time frame. So here it is. So this is the breakaway point, right? So I'm going to go from here again and make another one, the same one. So from here, right, this recent low, add a drawing, go to the retracement, and then add another one. So now I have these like more tighter ranges, right? So, and then I'll make this a different color. So you could right click, edit properties, change the color, maybe like white or something, and then go to OK. And now I have my other ranges, right? So that's first how I use my Fibonacci retracements. But what about the future? Where is it going to go? So it could even, look, it went right to there, right? So when you're looking at, let's pretend now, get this out of the way, remove. If you're looking at tighter ranges, I usually look for an area that's like the recent low and the breakaway point. So from here, you know, now I just have my clean lines like that. And I know, okay, the next time it gaps up, I know I could aim for this area. So if I'm trading, this is XLK, by the way. So what is XLK? It's an ETF. XL, hold on, XL. You see these ETFs? XLK is technology sector. XLE is energy. XLF, financial. XLV, health, right? So all of these are different ETFs which comprise of a lot of different companies. So if you're trading something like Apple or Nvidia and you're seeing this major indicator trending bullish, right? Then you don't even have to trade this, but you can trade Nvidia, right? Because Nvidia is going to move way faster than this. I trade the faster movers, the growth companies. But I just use SPY as an indicator of where all my companies that are going to pay me dividends, that are going to give me better growth and better return on investment in the future. So most people, they first learn, okay, how do we do this, right? So this is the most basic of everything. Something retraced back from the high 23%. It retraced back 38%, retraced back 50%, retraced back 61%. So from the market high where we're at right now, we're at about 78% retracement since it's broken out and found the recent support. Does this make sense? Okay, so I want to show you my SPY chart or SPX. So what I did was from here, right? You can see all my lines. Same thing. I started from here, the very bottom of 1995, which I keep talking about was the last recession, right? Or besides 2007. And then so I added the drawing. And then I got the retracement. And then all I did was bring this to the top. And what did it do? It gave me all my levels, right? Of where the market should go. And I did this 2 times, exactly like I showed you previously. And it gives you my long time frame to see, okay, every time there's a huge 3-year market correction, I know where the bounce is, right? That's why I bought the long in October when everybody thought that the market was going to go down more. I'm like, no, it's not. Don't worry. So I went long in October. Then it touched my other fib, right? Because I started this one from same area. This breakaway point, right? See this 100% retracement from the top? So I got the breakaway from here, and then I brought it to the top. Once it touched the bottom, then it went to the next area, right? And then here was December when I said, hey, let's go long, market's consolidating. So nothing is a guess. People that are guessing, they don't know what they're doing. Don't follow them because they're not going to give you any wisdom. They're just guessing. Follow knowledge and wisdom with applied knowledge. Otherwise, you're going to end up guessing too. Okay, because trading isn't guessing. It's all calculated. This is all math. Fibonacci is all math, right? So where am I targeting next? Based on rate hikes. Okay, they're going to say the rate hikes are not going to go up. Then we could head toward 41.53. If it's going to go down, maybe we touch 37.74, but that's it, right? Into this quarter. Do you see this consolidation area? So this is how you can trade exactly into certain key areas and not be guessing anymore because it's all calculated. So when you compare this actually back to your options chain, now I'm going to show you some magic, okay? February 17th is the monthly, right? It's February 17th. It's showing $176 expected move, right? So if you add 176 to here, that's 3972. Okay, let me do it in my head. My plus 200 would be 4172 minus 25, 4172. So 4150, 4145. Okay, so it's going to be 4145, right? So 4145 is right here. Okay, it's about $17, $18, like these two areas. Look at the open interest. Pretty high, right? Oh, look at the open interest here. This is like one of the biggest ones next to here, right? So that means the put protection is there and there's enough calls and buyers to protect this position, right? 4150. Now we're going to go back to my chart. 4150. Oh, wow. 4150, right? Does this make sense? Nothing is a guess. So that means 4150 by when? 4150 by here, right? February 4150 by like February 17th or so, right? Does that make sense? It hits exactly. Fibonacci's are supposed to hit exactly with the options chain. So if it doesn't align with your options chain, you have to retrace and redo your lines because that means you're not backchecking and you're not being accurate. So the more accuracy you want, you have to backtest it and make sure that your lines and everything works, right? Again, we're not guessing. I'll say, okay, so let's just say, okay, I want to draw a fan, right? So I'm going to give you my coding. Normally it doesn't come out like this where there's like 6, 7, 8 lines. It comes out with, okay, let's see. It comes out with like, maybe like the normal thing, okay? This is the retracement. So that's how I got all these SPY levels or SPX levels, right? But look how accurate they are. My yellow line, look, it's so accurate. This is the arc. And just like I showed you, that 618 extension, right? So I'm going to show you first what the coding is so that you can have like a little cheat sheet. So you see here that 0.618, just like in my previous picture about how the golden ratio works, it's the inverse, right? So from there, your platform might show just 3 of these. So one space to the next, it's 0.118. So you just add 0.118 to this number to get the next number. Add another 0.118 to here, and you get the next one. To go down, you go minus 0.118, and you get this number. Minus 0.118, get the next line. So those are the coefficients, and basically, it's going to give you more lines. So let's just add another line, right? So I'm going to go 0.854 plus 0.118, 0.972, right? So I'll keep it red just so that you can see the difference. And then we're going to say, okay. You see? So it created another line. So anyways, how that works is how you first can create more lines is that way. But why does this work? Okay? This is the key. This is the key. I've seen some other videos where they just start random places, but it's not random. And I'm going to show you why my earnings is so accurate. I make my charts coincide with earnings dates and growth rate and my options chain. They all work together. All of them.